Awesome. Thanks, Lisa. Well, hello, everyone, and happy afternoon. Since it's 4 minutes past noon, I can say that. We're very thrilled to have you with us today for another one of our education sessions sponsored by the Education Committee of the Bucks County Association of Realtors. My name is Pam Croak. I'm the CEO here at BCAR. And again, we're thrilled to be able to offer you this valuable information. We've been offering these since, back in the spring, I guess. We switched from live sessions to these online sessions, and we're seeing a tremendous amount of engagement among all of our members, and we're just thrilled about that. A couple of tips for today. If you have any questions, we're encouraging you to put them into the chat section. Go to the bottom of your screen, hover on the chat bubble, and you can type your question there, and that is being monitored, and we'll get that question answered. We did get some questions ahead of time that we've already given to Marlena Scott, so those will be answered. We also ask that everyone please mute your microphone out of respect to everyone else. We'll get to the questions. There will be time for questions, but we do ask that you put them in the chat section. We are recording this session. It will be available after the fact. We are also going to provide a PDF of the slide presentation and any other resources that Marlena may set out in the presentation, so you'll get all of that. The other thing I wanted to talk about really briefly is the fact that a couple days ago, you should have received an email communication from us about our committees. We're looking for members for all of our committees, and that email went out, and it kind of linked people with the different committees and telling you what a committee does, and the fact that those committee meetings they're held virtually now, and they will be into the future. They last about an hour, and so you might want to look at our committees. You can go onto our website in the About section and see our committees, and reach out to us if you're interested in joining a committee, because our committees are the lifeblood of our association, and we'd love to have you join one if you're interested. The other thing, Marlena and I were talking just before you joined about YPN. That's the Young Professionals Network that you see across the country, really. And BCAR had a YPN group until several years ago, and we're looking to reinvigorate that group of individuals. And Dana Gray, our president, has formed a presidential advisory group looking at the topic of a young professionals networking group. So if you're interested in being part of that discussion, you can email me. My email is pcroke@bucksrealtor.com. And Lisa, if you could put my email in the chat so that everyone has it. If you're interested in being part of that discussion, please email me. So right now, what I'd like to do is introduce you to our speaker today. Marlena Scott is a single-family client and community engagement manager at Freddie Mac. She is responsible for managing and developing industry relationships. She has over 14 years of experience in the financial industry. She began her career at Bank of America, where she spent 8 years, and in 2014, she joined Freddie Mac. Marlena is thrilled to be part of a great organization such as Freddie Mac, where they focus on creating solutions to provide affordable and sustainable housing. Today, Freddie Mac is making home possible for 1 in 4 home borrowers and is one of the largest sources of financing for multifamily housing. So without further ado, I'm going to turn this over to Marlena. And Marlena, I thank you sincerely for all of the presentations that you're doing across the state, but especially for us. Thank you and welcome.
Thank you, Pam, so much. And thank you, the Bucks County Association of Realtors just for having me today. It's been a pleasure working and putting this all together. A special shout out to Lisa for all of her help, as well as my peer who's on the line, who's behind the scenes, Monica LaCrue, who really helps us organize, myself and my other counterpart, Carmen Mercado, make all of this happen. We've had a great relationship with Pennsylvania Association of Realtors for the last 2 years. So this is really exciting to continue this work that we have with you all into this year. So you taking your time to be here really shows your commitment to learning about affordable solutions and clients. I want to start off with just a really quick question out there. Can you put into the chat, what is the biggest barrier to home ownership? And I'd love to just get your thoughts and see what you think the biggest barriers are. So just go ahead and put it into the chat and we'll take a look at it.
Okay. I can start reading. Oh, there's quite a few.
Awesome. Lisa, if you want to let me know what some of those are.
Yeah, sure. Deposit. Do you want me to just read them out and then?
Yeah, that would be
okay.
fine. Mm-hmm.
Deposit, inventory, money and credit, financing, confusion.
Okay. All right. Well, yeah, those are a lot of the common themes that we hear. So I'm glad to hear some that you guys are experiencing in consistency with a lot of other industry professionals. Inventory is, of course, right now one of the biggest barriers to homeownership, excuse me. And then also just having the credit and the confusion, you know, it's a big thing. So today we're going to talk through some of those barriers and talk about some of the solutions that we have available. So on the next slide, I'll be happy to announce that we celebrated in 2020 50 years of making home possible. To give you a little bit of background on what Freddie Mac does and who we are, we were chartered by Congress in 1970. We operate strictly in the secondary market. Our mission is to provide liquidity, stability, and affordability nationwide during all economic conditions. Most recently, of course, with the impact that COVID-19 has had on our economy. Our community mission is to stabilize communities, prevent foreclosures, expand credit responsibly, educate those future home buyers, and also support affordable rental housing. We operate in 3 main lines of business. We have single family, which I am a part of, multifamily, as well as capital markets. On the next slide, you'll see that exactly what our role is from a financial standpoint. So again, we operate only in the secondary market. What does that mean? We do not lend money directly. We buy the mortgage loans that meet our requirements from the approved lenders that we have. With the money that the lenders receive from us, they're then able to, or when they sell to us, they're then able to take that money and create more loans for more qualified home buyers. Freddie Mac then pulls those mortgages into securities that we sell off into the investor field worldwide. This in turn gives us money back that we're able to continue to loan out to lenders. And there's a cycle of about $1 trillion that flows through this on a yearly basis. In 2018, we created an affordable ecosystem initiative called All for Home. At Freddie Mac, we want to continue to grow responsible and sustainable home ownership. And the home buying process really is a team effort, with the real estate agent being at the epicenter of all of that. You work with all of these different parties, the loan officers, some nonprofit organizations, housing finance agencies, housing counselors, appraisers on a regular basis. So this initiative really wanted to identify the collaborations that we use to make the ecosystem work. There are really so many people that are part of the home buying process, and it's necessary for all of us to know who those players are and continue to work together to make home possible. So let's talk about the myths. I'm sure all of you have seen these myths before, and so we're going to talk about these, and then we're going to also talk about how we overcome those. So of course, common myth is that 20% down payment is required, or I don't make enough money to own. You can get a mortgage loan with greater than or equal to 3%. The average right now is between 12 to 15% down payment, and about 40% of home buyers put about less than 10% down. We're going to talk about some of the products that fall into that 3% range in a moment. FHA is the place for low down payment options. Freddie Mac has a range of low down payment products that actually come in lower than FHA does as far as down payment is concerned. I may only use my savings for down payments. You can use eligible down payment assistance. Gifts and grants are also okay too. And someone mentioned credit earlier, and we hear this often, my credit history isn't good enough. Well, the lender ultimately decides, but Freddie Mac accepts FICO scores of greater than 660. And Freddie Mac also offers Credit Smart, which we'll touch on later on ways to help your buyers get mortgage ready and to really put their credit profile together. The next one is I don't know where to start. Going back to the confusion, the buying process is complicated. There are not-for-profit HUD-approved counseling agencies that can help at little to no cost. We also will talk about a resource called My Home that's an online guide to help home buyers go through the process. Student debt is huge. It's something that we're constantly talking about. It may be a factor, but oftentimes it isn't. And we're going to actually talk about what population really does have student debt, and it's lower than you might think. I was rejected once, so I just can't buy, and this scares a lot of home buyers from the table. Well, let's take the time to learn what those issues are, and then you might be approved the second time. I want to spend a moment on this piece because I think oftentimes when a home buyer is not approved, they run the other way, when in fact they might only need to change one or two things. So thinking about how you can help those home buyers overcome that, it keeps your pipeline going, helps the home buyer to recognize you took that time out, and then they'll come back to you and they may recommend other people to come back to you as well. So the next slide, we're going to get into the state of the housing market. Now, some of this information is going to be updated over the next quarter or so. So we are looking at it from a 2020 lens, but we look at the trends and challenges so that we can identify affordable solutions, the products and resources that we provide. So from a macroeconomy level, of course, with the pandemic, it offered the greatest challenges we've seen. Since March 2020, unemployment has been at historic levels. It's continued to be at those levels, but has declined, of course, since the start. We're still optimistic of the economic rebound in the next year. Housing inventory, it was continuing to be scarce, as we talked about earlier and someone mentioned. And with the impact that COVID-19 made, the helpful thing was with the government and Freddie Mac were able to respond by offering forbearance to homeowners and pause evictions, which did help mute some of the impact. And of course, the CARES Act and the recent Stimulus Act have also helped to mute some of that impact as well. So on the next slide, you will see that our borrower is changing, and you're probably seeing that in your field right now. We project them to be younger and more diverse in the many years to come. So let's talk about what the first-time home buyer says at this time. So we recently took a look at the NAR 2019 first-time home buyers, and they're holding steady at 33%. Due to tightened credit standards, of course, it has suppressed the level of first-time home buyers. This started back in 2017 with a downward trend, in part due to, again, limited availability and affordability. However, in 2020, I'm so excited and interested to see how this worked because there was such a boom in the marketplace, even given the circumstances. So I look forward to seeing if that increased at all. The average age of the home buyer is 47 years old, and median income continues to rise. It's at $93,200. 50% purchased their home in the suburbs. And with, again, the current impact of the pandemic, we have seen that an increase out of the more urban areas to the suburbs has continued to grow. On the next slide, you'll see that the average down payment right now is 12%. I mentioned it was 12 to 15% earlier, but it's closer to the 12% mark. I want to point out on this slide that 89% of first-time homebuyers purchase their homes through real estate agents or brokers, really solidifying the importance of having the trusted advisor with the homebuyer through the process, and goes in line with the trends that we've been seeing, and I'm sure that you're seeing in your business. There's also an increase in growth in multi-generational homes. As parents get older and children start to move back, there's a focus on purchasing homes that are not just single family, but also can accommodate multi-generations in there, and especially for a cost saving purpose as well. 28% of recent homebuyers also identified as veterans, and 3% identified as active duty service members. I mentioned that the homebuyer was going to become younger and more diverse. We saw the biggest growth in diversity between the ages of 18 and 39 years old, followed by that of the 40 to 64 years old. We expect this to continue on, and by 2045, really making a larger impact. So as, of course, the time goes on, we expect these numbers to increase even more. So what we did, I wanted to take a look and show you some local data, because I know that that helps you in your business and your strategies. So as some of you know, millennials, we just talked about, you guys restarting the YPN network, which is great. Millennials are going to make up to a large population of first-time homebuyers and future homebuyers. The good news is that in Bucks County, also Montgomery, and some of the surrounding counties, millennials make up to a large portion of the population, followed by those in the 35 to 44-year-old bracket. You can see Pennsylvania as a whole also makes up to a large majority of that share, but a little bit lower than the overall US population. On the next slide, you'll see how it breaks down as far as owner occupancy and renters. The reason why we take a look at this is because this is an opportunity for you to kind of see what your home buyers are made up of. Keeping in mind that owner occupied could be potentially looking to age or retire in place, meaning they're going to stay in their home. Maybe they're just looking for renovations. They could be looking to potentially downsize, or they could be expanding their family, which means they need a bigger home. Looking at the renter occupancy, this opens up an opportunity to look at those who may be looking to get into a home. And of course, right now, again, people working from home, it has really put a large highlight on the fact that most renters are now looking for that place to just call their own for a single family condo, townhouse, something like that. So as you can see in Bucks County, it's about 64.9% owner occupied. Montgomery is about 69.6%. Of course, it's lower in Philadelphia County. The closer you get to the city, it's higher renter occupancy. And then of course, renters in Bucks County is about 35%. And then you have Montgomery at about 30.4%. So in the next slide, we talked about credit. Someone mentioned that credit is a big challenge. The US average right now is at 698, and you can see that most of the counties and Pennsylvania overall are trending higher than the average. Philadelphia County is still at about 650. But what I want to hit home here is that even though this credit score could be lower, it may not necessarily be because they have bad credit. It could just mean that they have a lack of established credit, especially with the younger generation, maybe not knowing the importance of establishing credit. So those things can help with a little bit of financial education. On the next slide, you'll see that first-time homebuyers are actually being made up of 53% of married couples. You can see on this chart that is a decline of what we've been seeing. So basically really hitting home that the traditional married couple is not going to be your traditional homeowner profile going forward. So it's kind of been going back up and down the last couple of months. And then you can see even at one point, it went down to 48%. So really showcasing the changing profile of your home buyer, of your first-time home buyer. In addition to that, on the next slide, you're going to see a breakdown of these different households: married couples, single females, single males, unmarried couples, and other. Single females are actually the second largest home buyer segment. And it kind of goes with what we're seeing just even in the workforce. Many are just taking, leading as far as work is concerned. They're also leading in their house or head of household for some of them, and it's reflecting in the home buyer households. The biggest age group is actually 65 to 73. They make up to the highest share at 22%, and they're the least likely, of course, to have children at home under the age of 18. But I also want to point out on this slide that the age bracket of 22 to 29, now this is about Gen Z into millennials, 21% of households actually are unmarried couples. So just really, when you're going into your business, understanding that the traditional home buyer profile is changing. How are you looking at that? How are you navigating these changes? And how are you going to prepare your business? So millennials, of course, are still inspired to be the young first-time home buyers. On the next slide, you'll see that they have a lot of optimism when it comes to buying. And when they put their mind to it, they're going to make it happen within a year. So 20% of millennials are actually planning to buy a home within 1 year once they make that decision. Just a little bit more information to that, the largest share of home buyers, first-time home buyers, are millennials, and they make up to 38%. They're projected to have 49.8 million households by 2035. That's huge. And that, of course, we're seeing that trend continue even throughout the last year. And 85% of millennials think it's a great investment to own a home, and 98% of millennials think that having a realtor is important. And I want to stay with that for a moment, because a lot of times, myself being a millennial as well, you get the impression that we are more not tech savvy, so we don't want to engage or have someone help us. But realistically though, they really do rely on the trusted advisor, you, to walk them through the process, because it's a big commitment. I mean, I couldn't imagine me being a first-time home buyer myself a couple years ago. You need to have your realtor. I needed to have my realtor to feel comfortable about the transaction that I was doing. So let's talk about the student loan debt that I mentioned earlier. It receives a lot of attention, and it's also blamed for many reasons why millennials can't afford to purchase homes, but there's some shocking numbers to that. So while the debt is significant for some, it's a smaller amount than it's actually perceived by the population. So 20% of millennials actually have student loan debt. And there was a slide a little bit earlier that said that 24% of all first-time home buyers had student loan debt, not really breaking it down by age group or generation group, excuse me. But yeah, 20% of millennials have student loan debt. So the older millennials tend to have larger student loan debt at 10,000. But I think that we need to shift the narrative when we talk about student loans, because I know oftentimes when you hear, oh, I have a student loan, maybe it's oh, they're not going to qualify, or we kind of put a negative connotation on it, when in fact it may not be as much of a factor as we think it is. So on the next slide, how do you translate all of this information into business opportunities? At Freddie Mac, we coined the term mortgage ready, which you'll see. We conducted research based on specific criteria that includes all population in the US under 45. The definition of mortgage ready and the criteria that we used are a FICO score greater than 620, total debt to income less than or equal to 25%, no foreclosures or bankruptcies in the last 84 months, and no severe delinquencies in the past 12 months. And what we got was a population of 37 million. That is huge. And that's across the country. With that, we broke it down to millennials, which made up 24 million, Asian Americans, 4.3 million, 7.8 million Hispanics, and 2.9 million African Americans. We then took that information and we wanted to identify two more categories: mortgage weak and mortgage owner. Of course, mortgage owner is self-explanatory. Mortgage weak, we found that 49% of this population were mortgage weak, 46% were the younger millennials, and 44% were the older millennials. Again, what I want to point out is just because they fell into the mortgage weak category does not mean that there was a bad credit or there was anything that maybe was super negative that they couldn't overcome to get it to become mortgage ready. It could be that they are credit invisible, which means that they have little to no credit available on their credit profile. And maybe it's just a little bit of time walking them through a financial education course, or helping them understand that they need to establish something. And maybe in 6 months, they come back to you and they're ready to go because they've established their credit. So just want to take time to really, make a note of that mortgage weak identification. So how can you, the real estate agent, help that borrower of the future that we just talked about? So it's important to understand the borrower's needs, the challenges, the concerns, and specific situations in order to identify the best products and resources to fit their need. I know that it's a lot because you guys manage the entire process basically, and you're there holding the hands of your home buyers. But these conversations are important to help you help to overcome some of the misconceptions about homeownership and the mortgage process. And so Freddie Mac, we create a couple different things to help with that and help you have some products in your toolkit. But some of the needs that we identified when we talked or heard from the attendees earlier, or you guys earlier: down payment assistance, How much do you have available for closing? Are they a first-time home buyer? Are they looking for a condo or manufactured housing? Is it single family or multifamily? What is the purpose of the home? And just the property area and the area median income. So that's when we came up with Home Possible. As you can see on this slide, we provide a Home Possible comparison to FHA. To give you a little bit of background about Home Possible, it is a 3% down conventional product. It has conventional mortgage insurance. It is only required when the loan to value is 80% or higher. There's no upfront mortgage insurance premium, which is different from FHA. FHA is a great product, but if you have a home buyer, especially those who have a credit score of 740 or higher, you may be doing them a disservice by offering them a more expensive loan, meaning that's going to cost them more over the life of the loan, which is the mortgage insurance that stays on with FHA, as well as the upfront and monthly premiums, and it's required regardless of the loan to value. So with Home Possible as an option, you're able to help your home buyer provide more funds to the principal up front, and also it helps your home buyer to build equity faster. And usually, on average, a home buyer can get to that less than 80% loan to value within the first 5 to 7 years. So how do you know if they qualify for it? We created a Home Possible income and property eligibility tool. This tool, you can actually verify if your home buyer qualifies for it by simply putting in the address. Once the address is input in there, on the next slide, you'll see what will pop up. And that will actually be a pop-up box that will tell you exactly the income that is needed to qualify for Home Possible for that particular property. We've also partnered with down payment assistance, and you can see that highlighted in the blue, that will tell you and provide a link to see what down payment assistance programs are available to your borrowers and that they may qualify for, keeping in mind that 3% is their down payment requirement for Home Possible. Now, what happens if they don't qualify for Home Possible because they make too much money or they're in a higher geographical area or higher income area? That's when we created Home One Mortgage. This is also a conventional mortgage product for qualified first-time home buyers. 3% down payment. Again, no geographical or income limits. This offers a flexible financing solution. And it also addresses, again, the portion of the home buyers that do not qualify for the Home Possible affordable product. So these are two great products to have in your tool belt as options to FHA, to conventional, to those who are concerned about not having enough for down payment, but have stable, affordable credit, and they're able to qualify for either one of these products. So another thing that we talked about was aged housing stock. So we decided to come up with some different products to address the aged housing stock as well as the low inventory. We came up with Choice Renovation, Green Choice Mortgages, Manufactured Housing, including Choice Home, which is a factory-built HUD code home, and then Shared Equity Home Ownership. And I'm going to touch on two of these because this will help you when you're dealing with home buyers that are concerned about aged housing stock, or you're also just working with those who are just looking for upgrades or things like that. Maybe some of your past clients that's available to them. So let's start off with Choice Renovation, which is our financing option. A large number of homes need repairs and renovations, either to meet the needs of the current homeowners or the options for home buyers, as we just said. According to the Harvard's Joint Study for Housing Studies, almost 80% of US homes are at least 20 years old. 40% are at least 50 years old. So we have an aged housing stock issue here in this country. And then in the rural market, 60% or 30% are older. And many people are using their personal funds, their credit cards, home equity lines to refinance. Choice Renovation offers a financing option that is easier and more cost effective. The renovation costs are included in a single close with a home purchase or refinance. So this really eliminates the need for any interim construction financing or separate closings. You can also pair this with Home Possible or Home One. So this is going to be great for your younger home buyer who is looking for a home and maybe they can't see the vision at the time of their dream home. You have a solution available to you to help them really identify that. Next, we have Green Choice. This is our streamlined renovation product that finances home energy efficiency improvements that can help with reducing energy and water usage, basically helping you lower the utility costs, which come a long way with some of the aged housing stock. The improvements, if they're $6,500 or less, there's no energy report needed. And also this can be partnered with Home Possible or Home One as well. So really these two products are another great resource to have, another to add to your tool belt to help really offer the best product solutions. So I know that was a lot of information, and I know you have some questions coming up later, and I promise to address them. So how do we turn all this into action, into knowledge? So we have created also resources available to you to use in your business. There's no need for you to become a writer. You can leverage the marketing materials that we have available for you. You can use some of these with your buyer consultations, future home open houses when we go back to doing those in person, and also some seminars if you choose to have them. So these are available in Spanish as well as English. And as you can see on there, I put my little picture and my logo and everything. You can actually create that and customize this yourself. So it's a great tool for you to have. The next resource that we have is called My Home by Freddie Mac. And I mentioned this a little bit earlier, but if your home buyer is concerned about not understanding the process, just really scared to dive in, this is the website for them. There is no one who's marketing on here. There's no one who can potentially take your client from you. This is strictly for consumers, but it helps them walk through the entire home buying process. It also helps them decide whether renting, buying is an option for them or the best option for them. So it's really great for everyone to keep this in their pocket because it's a great resource. The next one is down payment assistance. Again, we partnered with Down Payment Resource website. How you can use this in your day-to-day business is you can actually take your listings that you have and put the address into this website and see if there is down payment assistance available for this particular for that particular property. So it's really awesome. You can highlight that again when you're having your open house, or if even someone's reaching out to you. Now you can actually have that information available because down payment is really one of the biggest barriers that we're seeing right now to home ownership. So this is a great tool to have. And lastly, we touched on credit challenges and credit opportunities. We have Credit Smart, which is a free consumer online resource. This, I've taken it as a trainer to train it, and I'll talk to you in a moment about that, but I've also taken the first-time homebuyer education. It's great. It's interactive. It's very helpful. So let's talk about Credit Smart first. That's our 12-module financial education course. This will help your potential homebuyer make sure that they are ready for sustainable home ownership, helps them understand their credit, helps them understand what savings means, helps them understand their options and how to sustain home ownership when they actually get into it and avoid foreclosure and things like that. This is for someone who's come to you and maybe, again, they're on the cusp, they don't really have any credit established, but they don't really know where to start. This is a great option for them. They take it, get familiar with what they need to do, then they come back to you and say, hey, I'm ready to purchase my home. How can you help me? In addition to that, we have Credit Smart Homebuyer U, which goes along with Home Possible and Home One. It actually meets the first-time homebuyer education. Again, this is free. It's interactive. I enjoyed taking it. It wasn't one of those things that bothered me by doing it because it was extremely interactive. So these are two options for you. But in addition to that, you can actually become trained to teach Credit Smart in your homebuyer education classes. It is called Credit Smart Train the Trainer. We have 4 classes that we offer per year. Those dates should actually be available within the next couple of weeks. But I advise you to go back to the Credit Smart page, see when those are offered. You can become trained. It is a 4-week class, but 1 day a week is required, and it's about 2 to 3 hours. So it's definitely worth it. Again, I've taken the class. It's awesome. So lastly, let's wrap this up. And we know that COVID-19 has continued to be an impact, and we want to make sure that you have resources available to home buyers or clients that have reached out to you, family members, yourself included. So if we go to the next page, the first thing that we want you to make sure you do is that you contact mortgage servicers. That is where you start. because that is the company that receives the monthly payment to the mortgage. So they're the ones who have the best solutions available. Then the second piece is explore some of the Freddie Mac workout options that are available with the mortgage servicer. There's loan modifications, there's payment relief, making sure that you're keeping the payment the same after the forbearance period. These are things that you can have a conversation with your servicer about. We also created a Freddie Mac COVID-19 page. We wanted to make sure that you, the real estate professional, the lender, as well as the home buyer, has a resource to go to, whether they're a homeowner or a renter, to make sure that they have viable options to alleviate any possible eviction or any foreclosure situations that have stemmed from the impact that COVID-19 has made on so many people. There's also a interactive tutorial guide for those who are facing homeownership or hardship, excuse me. And this actually tells you what your options are. It allows you to put in what you're going through and to find out what the best solution is for you. We launched phase 1 last year, and now we're going into phase 2 now. It's definitely something that I recommend to keep on in your list so that you have that readily available to help any of those who might be reaching out to you who may fall into this the category. In addition to that, we have Freddie Mac Borrower Help Centers. We have 14 nationwide. These are HUD-approved housing counseling agencies that we partner with. They basically help with anything from, helping prepare prospective buyers for homeownership, help those who may be struggling, build credit, learn about the down payment assistance as well. So here is a list of all of the references, which you will all get a copy of this presentation at the close of today's presentation, and it'll have access to all of this. I really want to highlight really quickly the loan lookup tool. You can actually see what is available by putting your loan number in there and who owns if you're confused about who owns your loan and things like that, you can actually put that in there so it helps you to make sure you contact the right people. So lastly, we created a real estate professional resource center. This really is where we stay connected with you. I recommend you to sign up because we'll give you all of the information on any upcoming webinars that we might have, any of the ebooks that we release, industry trends. In 2021, we are going to be revamping this to be a lot more diverse as far as the video content, what we're doing with our partners, really highlighting what it is that is going on in the marketplace. And we'll also provide you with any news as well. So I want to stop there because we've covered a lot of information. I thank you so much. And I know we have some questions, so I will pause. And Lisa, if you're ready, I'll take some of those.
We don't have any that came in the chat box, but we did have those few that came in advance that I believe you have, correct?
Yes, I do have those. Okay. So let's take a look. So do you have a first-time homebuyer grant or any other program to help with closing costs? So again, it would go back to the down payment assistance resource. That is a viable option to help address some of those. And I believe Monica put that into that link into the chat. The next question I have is credit score requirements. Of course, we have no credit score requirement that we actually put into the guide, but the lenders, of course, have their own requirements as well. And then the last thing is, I think it was the same question actually. So I did address the first-time homebuyer grants or other programs. So those are the only two that I actually see. But if you guys have any questions after this, of course, Elisa, feel free to send those over and we can definitely take a look at those.
Go ahead, Pam, sorry.
No, I'm sorry, go ahead, Lisa. Did you want to say something?
One question just came in. Is there a list of approved lenders?
So there is a list on Freddie Mac, but we have a huge thousands of lenders. So most likely, if it's a lender you're currently work with, they have been approved for Freddie Mac to work with. And they would have access to all of the products that I discussed today.
That's great. Wow. That's a lot of information in under 40 minutes, Marlena. I'm impressed, but I can't get over the amount of resources out there. And I'm so thrilled that we did record this and that everyone's going to have the ability to come on after the fact and see it again. And I just thank you very much for your efforts on our behalf. And I did want to tell everyone that the next of our education series is going to take place on February the 3rd at noon. And PAR Counsel Hank Lerner is going to be talking about the changes to the Code of Ethics. There's been a lot of discussion out on the internet about what it means, what it doesn't mean, and you can trust Hank to give you the real information about that. So I hope you can join us on February 3rd at noon. If you want, you can go onto the BCAR website to the calendar and you can get the registration link to register for that. But you know, if anyone has any questions that come to you after the fact, as Marlena said, just feel free to email either myself or Lisa. Get in touch with us and we'll get your questions answered, no problem. But again, Marlena and Monica, behind the scenes, we thank you very much for the time you've given us today. And I hope everyone stays safe. And I hope to see everyone soon. Thank you very much all. Take care.
Thank
Bye.
you.